Let's focus on a company, and that is Stake Solutions. Maybe a bit soft today, but if you just look at what the stock has done in the last 1 month, I think it's done exceptionally well. 285 currently, down 4%. The 1 month returns have been close to 36 odd percent. 3-month returns about 75%. Over the 12 months, 94%. Hasn't done too many wrong things. They are pursuing acquisitions in US clinical research. They are investing ahead of the growth cycle as well, which is something that investors probably didn't like. But I think the last 2 or 3 odd months, they have put more correct steps than right steps. Let's talk about the business with Mr. Srinivasan HR. He's the Vice Chairman and Managing Director of the company. He joins us right now on the show. Good having you, Mr. Srinivasan. Thanks so much for joining in. Arguably in the last 3 months, the markets have come to appreciate the steps that you are taking, arguably with regards to acquisitions or the investments that you are making for the future. Take us through how the Stake Solutions at the end of 2019 will look compared to what it was, say, maybe 18 months ago, because you have marked upon a couple of things which you arguably were not doing 18 to 24 months ago.
Yeah, so I think I'll start with what I think we would be maybe 12 months from now. We are looking at an organic growth rate anywhere between 23 and 24%. And I think we're very comfortably poised to be achieving those numbers. This is on the back of a very good order book, which stands at about close to $190 million at the end of 31st March. But you'll have to appreciate that all those investments that went in over the last maybe 24 months, they've yielded in a very strong growth rate. So at a particular point of time, not everybody understands that the investment has to come ahead of the growth curve. But if you look at our last 12 quarters, our life sciences business has grown at about 8.5% compounded quarterly. Now, this kind of a growth rate obviously requires investments to come upfront, on the back of which the growth rate would certainly follow. So I think the business has been doing well. The company management has been very strong in orienting both the business and the deliveries. So we have results to see now which are very steady. And I think that they'll continue for a long time.
Would you believe that the key to growth going ahead, I mean, you've demonstrated exceptional growth, but the key to growth going ahead would be how the clinical research bit does, and how do acquisitions come about for you as a company in the US geography? Or is my assumption wrong?
So we'll have to divide it into 2 parts. So first, the clinical business or the clinical research business is a very important fundamental aspect of our growth story. So far, besides the US, even in Asia Pacific, we've been growing extremely strong. Europe has not been bad, but it's not showing the same exceptional growth that we are having both in the US and the Asia Pacific geographies. So overall organic growth rate, I think the ability to sustain at 23-24% is quite in order. Now, as far as the inorganic growth goes, yes, we are certainly scouting for acquisitions in the US, and hopefully during the current FY, we'll have something substantive that would we will be able to consummate something substantive. But it's not that we won't grow. We won't grow without an acquisition. I just want to call out that the organic growth rate itself is pretty healthy, and an acquisition would really launch us to a very different scale, and scale makes a lot of difference in the clinical research business. We are able to get much larger deals, and that's why we're pursuing the acquisition route concurrently.
Okay, sorry, just one small follow-up to that. You mentioned that something substantive could come out, and I take on board the point that the organic growth rate is looking very good as is, but what would define substantive in terms of the acquisition that you...
Well, when I say substantive, what I was primarily meaning was in the US market, so when I say substantive, I'm primarily talking of numbers above, let's say in the range of $20 to $30 million in size.
Fine. Just wanted to get that clarity, Navneet.
Yeah.
Hi, Srinivasan. Thanks a lot for joining us. Let's now talk about a couple of concerns from the investing community side. Your return ratios have been on the lower side. Free cash flow generation has not been so good. And also, I think receivable days for your life sciences business, they've been going up. And I understand, I think for a category like life sciences, receivable days are definitely on the higher side. But I think in FY18, it went up even further. What steps is the company taking to improve these variables?
So first, I think I want to maybe correct a data point on in FY18, our receivable days went down and not went up. So as against 113 days, I think we came 31st March, it should be closer to 94 days. So the receivable days have gone down. When you talk of ratios, I think it's important to understand that what ratios you're applying and to what stage of the growth cycle the company is in. If today we have to grow very fast, there are investments that are going to take place. So at the current stage, we should be evaluated on our growth rate, not on a steady state company with very, let's say, meager growth rates. And then the ratios obviously come into play. So for the next 2 years, I believe we should be evaluated on the healthy growth rates that we will be showing. That's how I'd leave it at this stage.
Okay, and any new acquisition on cards, Srinivasan, that you are looking at in FY19?
Yeah, we are in discussions with a few companies. I won't say we are close to finalizing anything immediately, but we're certainly in active discussions with quite a few companies in the United States, and hopefully something should consummate during the current FY.
How do you plan to fund those acquisitions in case if they fructify?
We have cash on the balance sheet. We have close to 350 crores on the balance sheet. Okay. We recently did a pref to the promoters, so we are fairly well funded. We don't need any further funds for these acquisitions.
I was just coming to that. Any more fund infusion that we can expect from promoters going ahead?
Well, at the moment, the company has enough funds to consummate the acquisition, so I don't think we will be wanting to put any more equity capital into the company at this stage.
Okay. This organic growth rate, Mr. Srinivasan, that you spoke about, obviously as the base goes up, the rates tend to dip a bit, but you reckon that for the next 4 or 6 odd quarters, if not more, excuse me if you believe it's a lot more, but 4-6 quarters, you think such high rates can continue?
Yeah, I believe for the next 24 months, we should have an annualized growth of anywhere between 23 and 25%. That growth rate should continue.
Wow, that's quite staggering in a scenario that most of the other, I mean, what everybody else is enjoying. I mean, my question to you then would be that would this be happening because you will get your foot in the door in certain places where you are not present, and therefore it comes naturally so, nothing wrong with it, but naturally so at slightly lower operational parameters than what the otherwise you would do?
No, I don't think our growth rate is dependent on any form of lower pricing. We are fairly we at benchmark or above benchmark in most cases. It's because of the tremendous capability and credibility that we've built up, and the fact that our existing clients are choosing to spend more with us. So we have an account-led growth with existing customers. That is what is giving us the higher revenue.
Interesting. I saw that in an investor day with a particular brokerage in the month of March or April, as the case may be. You spoke about your aspiration to be one of the top 5 full service providers for small and mid-sized pharma companies and functional service provider for large sized pharma companies as well. If you indeed reach the top 5, what do you reckon that takes your revenue profile up to? I'm guessing when you mean top 5, you mean by either the market share or the kind of revenue share that you have within that business.
I'd say that aspiration would put us somewhere between the $500 and $600 million range in terms of revenues.
Wow. Okay. That's impressive.
And we're currently at 246.
Yeah, that's what I was getting to. You're probably at about, whatever, rupees crore, about 1,500, 1,600 crores, or 240, 250. You're talking about more than doubling your top line in about 3 years, less than 3 years now, because we are well into FY18 currently.
Yeah, well, that's an aspiration. The current growth rates are good. If we are able to buttress that with adequate inorganic growth, I don't think that target is off the radar.
No, I'm sure you know what you're talking about. Just astounding growth rates, and I'm happy for that. I wish you all the best for that, at least, and hope that you and your shareholders can do that. Navneet, any other questions?
No, just one question, Srinivasan. What's the sort of impact that one can expect if the rupee continues to be where it is at current levels?
Well, we're not... See, the impact of the rupee is only a balance sheet impact as far as we are concerned. Because while we earn in dollars, we also consume a lot of dollars because we have a lot of people who are overseas in US and in Europe. So other than translation reserve, we don't see too much impact of the rupee on our financials.
Okay, we wish you all the best, Mr. Srinivasan. Thank you so much for taking the time out. We will look forward to talking to you post your first quarter numbers, as also the other quarters. Thanks so much for taking the time out, and all the best.
Of course, thank you.